Hey guys, what's going on? It's Guys here, and 2025 could be one of the best years to invest money. The stock market is expected to rise over 8%. This is basically a piece of ownership in a company that you buy and hold on to for an extended period of time. Now, typically, you would purchase these through a brokerage like Robinhood, Webull, M1 Finance, or any of these other ones listed on the screen here. In fact, if you're a beginner looking to get started, there are so many easy-to-use applications that give you the ability to invest with just a few clicks of a button. First, let's begin with the good. As of right now, the stock market is trading at an all-time high and earnings are expected to grow by another 7% throughout the next 12 months. Not all stocks are created equally, and although the overall market could continue going up, some companies are going to perform a lot better than others. But unlike stocks, these are decentralized digital currencies that run off of a blockchain network. They can be used as a medium of exchange, a unit of account, a store of value, and even a way to transfer money from one person to another. When you invest in cryptocurrency, you're buying a digital coin or token that represents a certain amount of value. First, let's talk about the good. Unlike stocks, cryptocurrencies operate 24/7, and they're not dependent on economic data, monetary policy, or any other outside factors that could impact their price. In addition to that, crypto also offers a level of decentralization that is not possible with traditional finance. If you want to get started with stocks, then I recommend checking out the stock market simulator on Public. This way, you're able to explore a wide variety of options, practice with fake money, and eventually invest as much or as little as you want into different coins and tokens. I really appreciate it. As always, make sure to destroy the subscribe button, and also feel free to add me on social media. Thank you so much, and until next time. The good news is that since crypto and stocks are uncorrelated, this allows you to fully diversify and maximize your returns. Come where you can practice and learn how to invest in the stock market without risking any real money. After all, investing is a marathon, not a sprint, and the sooner you begin, the faster you're gonna get there. And because of that, it allows anyone to participate from anywhere in the world. Finally, if you're looking for pure growth, few assets can compare to cryptocurrencies. Bitcoin is up 15 million% since its inception. Ethereum is up 20,000%. Cardano is up 4,800%, and so is Solana. And even Dogecoin is up 7,900% since 2013. The moral of the story here is that cryptocurrencies have the potential to make you a lot of money really fast. And if you had just $100, that would have turned into $150,000 with Bitcoin or $20,000 with Ethereum. In exchange, you then have a claim to a certain amount of cryptocurrency. And over time, that could appreciate in value. There's no FDIC insurance, and if your private keys get stolen, chances are you won't see your money again. On top of that, unlike stocks, cryptocurrencies are highly speculative, and their values are based entirely on supply and demand. Since there's limited supply of most cryptos, it's only a matter of time until the market reaches equilibrium and stops going up. Finally, since crypto is relatively new, there's no guarantee that it's going to continue going up forever. For example, Tesla stock is down 27% year-to-date despite their record-breaking deliveries. It has been known to double or drop 50% in a single week, and it is not uncommon to see some coins fluctuate by as much as 20% a day. For that reason, you have to be prepared for the possibility that your investment could drop to zero, and the only thing you can afford to lose is the money you can actually afford to lose. And this allows you to easily open and close positions on a wide variety of coins and tokens. This means that no entity has control over it, and it operates completely independent of monetary policy. In addition to that, crypto is also extremely transparent. All transactions are viewable on the blockchain, and since it's a decentralized network, nobody can change the data or information. Finally, crypto is also incredibly fast and efficient. Transactions occur within seconds, and it is accessible worldwide regardless of where you live or where the recipient lives. From Bitcoin and Ethereum to Dogecoin, Shiba Inu, and anything else that you can think of. Plus, if you're looking for a safe place to store your cryptocurrency, it is recommended to keep your funds in a cold wallet offline, in a secure location away from anyone who could steal it. Similarly, Netflix is down 29% year-to-date, even though their subscriber count continues going higher. And then there's companies like Disney and AMD who are both down 11% year-to-date. The moral of the story here is that even though the stock market is on an all-time high, there are still a handful of companies who are selling off for reasons that may or may not be justified. Even though it may seem counterintuitive, the higher prices increase, the fewer the chances are of a major crash. And why does that happen? Well, because investors will often extrapolate future growth from past performance, and the higher prices increase, the less likely it is that they'll drop even further. For example, imagine a business owner who expects his sales to grow by 20% year after year indefinitely. If that happens, then yes, his business could be worth hundreds of millions of dollars, maybe even billions. But it's probably not realistic. However, if he adjusts his expectations to say 10% year over year, he might be able to hit those numbers for a lot longer. In other words, the higher prices go, the lower the expectations are for future growth, and therefore, the less likely it is that they'll drop. Of course, that's not always the case, but it is generally true that the higher the stock market rises, the slower the rate of growth tends to be. And with interest rates being cut throughout the rest of the year, there's a very good chance that the bull market could continue even higher. And the best part is stocks are extremely liquid. Valuations are extremely high, especially when compared to the bond market. Today, the average 10-year Treasury yields 3.9%, meaning that if you lend $1,000 to the government for 10 years, you'll receive back $1,417. By comparison, the S&P 500 has a dividend yield of 1.6, meaning you'd receive $16 in dividends for every $1,000 invested. In other words, if you want a similar return to the stock market, you would have to invest $6,500 for every $1,000 you lend to the government. Put another way, stocks have a significantly higher risk profile than bonds. To make matters worse, the chances of a recession are growing. This means that if you were to buy a stock today, you're taking on a slightly higher risk that earnings could drop, and as a result, so could the value of your investment. This means that if you decide to sell, you can convert your stock holdings back into cash in a matter of a few seconds. However, not all stocks are created equally, and some are simply a lot better than others. And they give you the ability to purchase a fraction of a share at a relatively low price point. On top of that, if you want even more, many brokerages also offer fractional shares as well, meaning that you can invest just a few dollars into something that you believe in long term. Interest rates are likely going to fall, and with the recent crypto regulations, the market will begin to mature while presenting brand new opportunities that have never existed before. So here's what you need to know about stocks vs. crypto in 2025, because one has the potential to make you a lot of money. But first, in order to figure out where your money should go, we need to break down exactly how each one works, the pros and cons, and then finally where you could put your money to work. Although before we start, since most people don't know this, all of my investment profits are public. So feel free to follow along if you want or don't. That way you can see everything that I buy, when I buy it, how much I pay, and hopefully do a little bit better than me. Anyway, with that said, let's begin. Alright, so first we got to talk about stocks. In addition to that, there are also exchange-traded funds or ETFs which allow you to buy a portion of an entire index fund. For example, SPY is an S&P 500 ETF. So if you wanted to invest in the entire stock market, you could buy a single share of SPY and own a tiny part of the top 500 companies within the United States. This is the benefit of investing in stocks. You get instant diversification with just a single click, and you could do this with only a few dollars. Like seriously, with fractional shares, you can invest as much or as little as you want into whatever you want without having to worry about the price. If you want to buy a share of Apple, you can. If you want to buy a share of Disney, you can. Or if you want to buy a portion of the entire stock market in SPY, you can do that too. Now sure, a few years ago, this wasn't possible, but today, investing in the stock market is more accessible than ever. So now let's talk about the good, the bad, and the ugly. However, that leads us to the second point, which is the bad. However, even though that's a possibility, that leads us to the final point, which is the ugly. But now let's talk about crypto. Just like stocks, cryptocurrencies are considered an investment. Now, in terms of where you can buy cryptocurrency, most brokerages offer this, including Coinbase, Gemini, eToro, Crypto.com, and many others. On the other hand, the benefits of crypto is that it is largely unregulated. Now, obviously, just like stocks, cryptocurrencies have their own set of advantages and disadvantages, and here's what you should know. Although now let's talk about the bad. Because crypto is decentralized, it is extremely difficult to get your money back if something goes wrong. However, even though that's a risk that needs to be taken into consideration, that leads us to the ugly. Cryptocurrency is extremely volatile. So which one should you invest in? So when it comes to investing, I personally believe that the best strategy is to diversify across both stocks and crypto. As far as crypto is concerned, I personally recommend starting with Coinbase because they offer a wide variety of coins and a user-friendly experience. And that's why if you want to get a head start on investing. So with that said, you guys, thank you so much for watching.